This trading strategy made over $3,800 in less than a month, and the best part is that it's really simple. But hold on, before we continue with the video, let me tell you that in Forex Tester Online we are launching a massive discount of 30%, and with the discount coupon that you got down below, you're going to get up to 40%. So if you're thinking of buying Forex Tester Online, this is the moment, because this offer is only going to be valid today, tomorrow and Sunday. And now let's dive straight in, because this strategy has a bit of story, because it was born as a hedge martingale strategy. Okay, and as all we know, hedge and martingale strategies can be really good in the short term, but in the long term it can give us some problems. But obviously the core strategy, I thought it was really good, so I adapted it to my trading style. And guys, this is brilliant. So just to give you a bit of context on how a hedging strategy works, basically when we're on the chart, we're basically going to set a level here and a level here, and we are going to sell when it comes to here, and we are going to buy when it comes here. So let's say the price comes here above, it opens buy, and now let's say I open one lot here, and let's say the price drops down to this level here. We're always going to have the same fixed levels. And when it drops down here, I am going to sell here, but with a higher lot size. This is why it's included in the martingale strategies. So when I do this and the price comes down here and hits the take profit, basically I'm going to assume this loss, but take the profits from here, and how the lot size is bigger and the range is bigger in terms of profit, I end up in a profit. So when, instead of hitting a stop loss, basically I hedge the position. What is the big problem with this? Basically, if the price comes back up here, I need to open another position, an extra one plus the one that I've opened here, and that way if it comes to the take profit here above, then obviously I'll still leave in profit. Where's the big issue? When it does this. When the price does this, and this can happen, it will blow your account, because it's the same as using a martingale, that you just add positions on a losing trade until it reverses. So basically what I wanted to do is sort this out to make it a long game winner, so we can basically make profits in the long game, and I have adapted it in a way that it works really well. And obviously a big disclaimer here, this is just a back test, and you need to test it yourself before jumping into real markets, because obviously you need to get used to the strategy and obviously get your own data to actually believe in the strategy so you can make money in the long game. So please, nobody should use this strategy straight into live markets. Back test it, take your time, and when you get your results, then you can move along. But let's continue through, and to perform this strategy we are going to be working on the London Open. Okay, and we're working on the London Open basically because we're working on the pound against the yen, and as we know, the pound against the yen in the morning have some great expansions. So basically what we want to do is catch these expansions that happen virtually every morning, and that way we won't get caught in our basically this range. But if it does, we still have a solution for that. So now basically what we're going to do is going to go to the London Open. And once we're in the London Open, what we are going to do is we are going to add some levels, because obviously what we don't want to do is work with random ranges, because there anything can happen. But if we work with some static ranges like the psychological levels, then it works quite well. And to find the psychological levels, we're going to need to come to adaptive and psychological levels here. And the step multiplier, this is super important, we're going to set it at 2. This is going to mean 200 points or 20 pips. Okay, as we can see here, there's 20 pips difference between each level, and this is where all the magic happens. So now first we need to understand a bit of context, where the price is and where we can expect to go, and where we want to open our orders. So basically just now the price has touched this level here. So as it's touched already this level, we don't know if it's actually going to continue going up or it's going to drop down. So basically what we're going to do is we are going to set a sell at this level down here. Now if the price comes to down here to the middle more or less, then we can set our buy position here above, and there we've got our both buy and sell stops. So basically it can activate either on the upside or either on the downside. So now what we're going to do here is we are going to set our sell stop just down here, because obviously this is already validated, and if it continues up, then we can either wait or enter the buy just here above. But just so you understand, we're not going to have a fixed range from the start, because obviously we're not aiming for that. We're aiming to enter a good odd position and then we can create our range so we can actually hedge some positions. So like I said, I'm going to add my sell order down here. My stop loss is not going to be placed, obviously, because we're not using any type of stop loss, but my take profit is going to be 40 pips. Okay, and more or less I was bringing it up to 300, so let's say 38 pips, just in case price doesn't want to touch the round numbers. Sometimes it happens, it reverses 1 pip away. So, and now super important, what we need to do is set our lot size. Okay, in this case I'm going to set 1 lot size, but this depends on your trading account. You can't set 1 lot size on 100,000 account, and I wouldn't do it on 1,000 account either. In this case it's a 10,000 account, so I can set 1 lot here. But if you've got a smaller account, if you're training with a smaller account, then obviously don't set 1 lot size, because it's just going to generate big drawdowns and it can even blow your account. So 1 lot size to start, and then we will up this lot size in the future if we need to. So I'm going to place the order right now here, and let's see how the price develops so you can see how it should perform. Perfect, it's touched here again, no problem. Now we're going to enter a buy stop if it blows through here. Okay, so I'm going to enter a buy stop just here above. And as I say, the take profit is going to stay the same, 40 pips and 1 lot size, because it hasn't entered an order before. So there's this, and now this sell stop I need to delete because it doesn't match with the lot size that I actually need. So I'm going to have to open another sell stop here, but this time I'm going to multiply it by 1.5. Okay, basically what we need to look is that when we actually hit a stop loss and it goes to the take profit of the other position, we actually make money or stay in break even, because this way we are going to minimize the actual losses, and where we normally would take a stop loss, we will take break even. Okay, so now we've got this, we're going to place the order here, and now we just need to wait for the price to either hit our take profit here above or open our sell stop. So let's see what happens first. There we go, it's hit take profit. We're done for the day. Now we can close the computer and we can enjoy life. So let's go to the next London Open so you can see another example, and so if we can see some hedges so you can understand how it works. And there we go. Now we're going to be aiming for a sell stop, okay, because it's coming from here, and obviously I don't want to re-enter this level, so I'm going to add a sell stop down here. Let's see if it actually comes down. Perfect. So there we go. We're going to add the sell stop there. And we're going to come back to 1 lot size, because obviously we don't need to add anymore. So now we are going to wait for it to open, and now we just need to wait, see if it either comes up here to add another buy. And another thing that I didn't mention, when it comes to half of the take profit, we are going to protect the position. So here we're going to bring our stop loss in, and we're going to just shift it just below the position, because obviously what we don't want to is go into a range and start accumulating positions. So this is the first protection that we had, that when we half of the take profit through, set a stop loss, and we could even take some partials if we wanted to. In this case I'm not going to do it, I'm going to leave the complete position, but we are going to set this break even to avoid any issues as well. This take profit, we're just going to bring it just a bit above, and let's see if it comes to it. Ooh, there we go, it's hit break even. That's no problem at all. And here we can either enter another position here above, because at the end of the day it's reversing up, or we can leave it as it is. For this time I'm going to leave it as it is, but like I say, these are things that we can change, and whatever we feel more comfortable with we can do. So now we've got this, basically I'm just going to go to the next London Open. Let's see how this would performed. If we would have entered a position here, we would have hit the take profit, so that would be fine, because at the end of the day we didn't assume any risk here because it went to break even. But let's go to the next London Open, and as we can see, the price has touched this level here. It's virtually came up here again, so we could consider both ranges are more or less valid. And as well, the trend is actually in a downtrend, so there's high odds that it actually could continue down. So in this case, let's see what touches first. In this case, it touches the level above, so we're going to enter a buy up here, and take profit stays exactly the same, 1 lot. So let's see how this performs, see if it jumps back down to this level down here. It looks like it does. Perfect. Now we'll be entering the sell position. That will be the first hedge that we add in, and like I said, this was going to be 1.5. and now let's see how this one performs. Okay, it's coming back up. Here's our second hedge, and here we need to be careful now. We're going to add now a buy position, and we can leave 1.5 lots, because obviously with 1.5 lots plus one lot is higher than just 1.5, so we don't need to add any more lot size on there. In any case, you'll need to do a complete scheme of how many hedges you actually want to assume, because each one you assume is a higher risk that we can actually lose later. So basically this will be depending on your risk profile. But let's add our buy stop there and let's see how it performs out. So okay, it's coming back down, and here, me personally, I'll leave the position. Just now we're sitting with 3 positions open, and these 3 positions are making a total of virtually 3%, just a bit above 3% in drawdown. And obviously I don't want to risk anymore, because when this happens, the range can continue for 1 hour, 2 hours, 3 hours more, and obviously it's not convenient for us. So here I would just literally leave all the positions and just call it a day, call it a loss. In any case, when we hit one take profit, we are making a 2% of the account when it's a clean take profit, and now we've just lost a 3%. So it's not a major loss, but we still can use the hedge to actually avoid some stop losses and make the equity curve look a bit better, and obviously the trading strategy will be a bit more stable. Now we would only need to go again to go to the next London session and see what we can find. A lot of days we can get a straight take profit, because as you know, the pound against the yen is really volatile, so it sometimes just goes straight to the take profit and we don't even need to add any hedge. But when we do, we can sometimes save some money by leaving in break even. So now we're sitting on this level here, so we could look for a breakout on this level here. There we go, there's a breakout, so we enter our buy position just here above, and let's see how this one performs. Okay, it's come back down, so I would add another sell position here. In this case, I forgot to add 1.5, so just let me correct this position here. So we need to bring this one down to 1 lot size, so there we go. And now we would add our sell position here with 1.5 to add this extra lot size on it, so we can then actually get some profits out of it. So we'll place that there, and let's see how this one performs. Okay, it's coming back up again, so I add my second one, and if it comes back down again, I would call it a day again, because obviously I don't want to risk too much. So let's see how this one works out. There we go, it's going up, perfect. Here I won't protect the position, because obviously I already have some positions open, so it will depend on you. If you want to protect the positions, you can do it, but obviously we must take care of that. Just now we have a losing position here, so if it comes down, we will take some losers. So let's see how this one performs, and it looks like, oh, okay, it's hit take profit, and here we must be careful. Always close the position when we hit the take profit, because obviously this is just going to continue, and it could continue up, and we could generate even more drawdown. As you can see, this position is losing 563, and our take profits made a total of 500, just above nearly 600. So they were more or less staying in break even, so that is completely fine. Like I say, you can risk more or less depending on your risk profile. You could double each position if you want more profits when we get one hedge, and things like that. Now we come to the end of the backtesting. The results are really nice, making a 38% profit on the account in only 1 month, so that is completely massive. And overall, we made a fair amount of trades. I think it was about 30 trades that we did in total. As we can see down here, 31 trades, just enough. 1 trade a day. At the end, 1 trade a day can beat 1, 2, or 3 trades if we had some hedges. But it gave us a nice profit factor of 2.72 with a 38% return, and with a max drawdown of a 12%. Obviously the max drawdown is going to be a bit higher because we're using some hedge, but the good thing is that we are protecting ourselves with the things that I explained just previously. And as well, our equity curve is really stable going up. We have a win rate of a 68%, and considering we are aiming mostly for a risk reward of 1 to 2, this is quite high. But obviously, including the hedges, sometimes the average profit and the average loss is going to aim more to a 1 to 1, but even with 1 to 1, a 68% win rate is massive. If we come to the analytics inside, we could go through a few things and try to optimize even more strategy. Drop down a comment back down below if you want me to do this with this trading strategy. And as well, we can check our exit optimizer that is giving us basically a static result that if I use 22 pips stop loss and a 40 pip take profit and a max holding duration of 1 hour and 40 minutes, it would bring my win rate just a bit below and my net profit would just go just a bit below that it was, but my profit factor would go up. And as well, it wouldn't be as complex in terms that I don't need to manage the position adding some hedges. It's just basically, hey, if you use this strategy and just use this risk reward instead of adding some hedges, then it could perform this way. And to be honest, it looks really similar to what I've got, but investing less time. So that would be a good idea as well. I could scroll as well this round here to see if there's any different setups, but on it, obviously the first setup that we get is normally the best one. But as you can see, I could even move this range of take profit up to 52 pips and we're still getting a 30% gain. And if I move the stop loss, it more or less stays similar. So we have a nice sweet spot here to actually pick a stop loss and take profit. And I would love to know back down in the comments if you try the strategy out, how it performs, and if you use the exit optimizer to find a different mix and match and you want to share it with the community, drop it back down in the comments. I would read every single one, and if it's really interesting, obviously I'll make a video about it. So said this, I hope you've enjoyed this strategy. I hope you've learned something new. And like I said, back down in the description, you got a nice discount coupon for Forex Tester Online if you want to get it for cheaper. And if you do get Forex Tester Online and you try the strategy, please drop me a comment back down in the comment section. So said this, my name is Jack. I hope you're all good, and I'll see you next time.